If you want to make $100,000, $1 million, $100 million, anybody can do it. Welcome to Real Estate Market Moves, where we are going to talk all things real estate, the housing market, commercial real estate, and how you can position yourself to take advantage of these uncertain market times right now. We'll start out with the October monthly housing report and trends. The number of homes actively for sale has decreased by 2% compared to last year. The total number of unsold homes, including that are under contract, decreased by 3.7% compared to last year. Home sellers were less active this October with 3.2% fewer newly listed homes compared to last year. The median price of homes for sale this October remains stable compared to the same time last year. We're going to take a look at home price charts here in a second. The homes spent 50 days on the market, which is 1 day shorter than last year. The interesting thing is, as the market inventory declines like it has, these percentages can spike. Number of listings can spike, can double, can triple, things like that, because you have fewer houses on the market. You might hear foreclosures have doubled, or properties going into foreclosure may double because there may only be 100 or something like that, or 50. So when you have very low numbers of inventory, very low numbers of foreclosures and things like that, the numbers and percentages can sound distorted. The inventory of homes for sale continued to grow late in the season. Typically, as you get into the fall holiday season, that's when inventory shrinks because people pull the houses off the market. There were 2% fewer homes for sale actively on a typical day in October compared to the same time in 2022. Inventory shrank compared to last year for the fourth month in a row after a period of consistent growth since April 2022. However, the gap between this year and last year is narrowing as the inventory of homes for sale in October grew by 5.1% over September. Typically, the inventory of homes for sale declines heading into October. However, despite this small monthly increase, again, the percentages are skewed because there's so little inventory. Active inventory still remains 41.8% below typical 2017 to 2019 levels, pre-pandemic levels. That's the key. There's about half as many, not quite half, but almost half as many houses for sale as is typical in any given housing market prior to the pandemic. And we have not recovered from those, from the, supply shortage that we experienced from the pandemic. Still haven't recovered from that. And you can see the active listing count in previous years, 2017 through 2023, how it typically goes down towards the end of the year. Total listing count typically goes down, where October right now of 2023, we're staying kind of steady. This is October housing report. The pending listings is going down a little bit because of interest rates being above 7%. That's kind of put a little bit of a damper into the housing market. Newly listed homes are kind of falling a little bit, and homes did spend, a little bit less time on the market, still selling in days in some areas, taking a little longer to sell in others. But the key is, again, it's all about the finance. And the other thing is a lot of the forbearance programs are coming due. So people's payments are going to be starting up that have been able to skip their payments for a while. Mortgage companies are still offering forbearance to a lot of people. You can just call up your lender and say, I can't make the payments. Some banks will they won't make you prove anything, and they'll let you skip payments. So, if you're in a position where it's putting pressure on you, call your lender. You got nothing to lose. Sometimes they'll just extend it, give you 3 or 4 months off, 6 months off, whatever. But some people that have been in forbearance, those payments are going to be kicking in. Add to that increased insurance costs, increased taxes, increased operating costs. It's putting a lot of pressure on people. So we might see the housing market and inventory levels start to shift, even with higher rates moving into next year. But I think from here out through the rest of the year, inventory is still going to remain tight in a lot of markets. However, it is growing in some. Again, Austin, Texas leads the country with price declination and inventory levels, things like that. But you can see right here, the monthly house pricing, some of the top housing markets in the country here. I think this is about 50 housing markets, plus or minus. Everybody's pretty much down month over month because you see a lot of price reductions. Some are up year over year. Some are down. But at the end of the day, since March of 2020, again, pre-pandemic, housing is still up 20 to 50% across the board in every market, even if they're down significantly from the peak of what we saw probably in 2022 when housing peaked, and since the shift of the peak in 2022. So even though pretty much everything is down from the peak, it's still up quite a bit because housing, again, we saw 10 years of appreciation in 2 years during the pandemic. So housing could potentially just kind of run sideways in terms of pricings on average. Every market's different, waiting for wages to eventually catch up with the increases in housing. So still a lot of pressure on the housing market, still not a lot of inventory out there. The best deals in the housing market are in new construction because builders are, they're obviously building as fast as they can. They can offer incentives and discounts. You can ask for those incentives and discounts, buy downs and things like that from resales and, sellers as well. And then, of course, there's interest-only loans, adjustable rate mortgages, things like that you can get to bring payments down. So there's still opportunities in the residential market, but inventories are tight. We might see that again start shaking loose after we get through the holidays. I think if consumers and homeowners are going to come under pressure, it'll be the end of this year going into the Q1 next year, where we'll start to see some people, especially investors, that may be forced to sell some properties that aren't performing. So that should free up some inventory. But again, we're still 2 million units short of where we need to be for a healthy housing market. And you can see there's a lot of talk out there in the commercial real estate market. The Fear and Greed Index reveals investors' optimism with caution. Obviously, the biggest sector is the office sector, where there's still a lot of fear right now. A lot of pessimism on office. Industrial still is the most optimistic. Retail has had a nice little bounce here lately. Multifamily is finally starting to come under some pressure lately, and that's largely because of this mezzanine debt, short-term bridge loans that a lot of multifamily investors took out in order to buy their properties, renovate them. So there's somewhere around 1.5 trillion of debt that's coming due in the next year to 18 months. In the commercial real estate space, probably more than half of that is multifamily. A lot of multifamily operators are under pressure out there. A lot of capital calls, a lot of properties not hitting their rent goals. Expenses have gone up, insurance and taxes and all of those things have gone up. The sharp increase in interest rates for mezzanine loans, often exceeding 15%, have significantly heightened the risk of defaults and foreclosures in the commercial real estate sector. Previously, these loans were more manageable with rates around 10 to 12%. The difficulty in refinancing these high-cost loans upon maturity is leading to a growing number of financial crisis among these assets. So what does this mean? There's going to be a lot of opportunities to buy distressed assets coming in the future. So you want to position yourself to be able to take advantage of that. And on that note, I'm releasing a brand new course. I went into a studio and professionally recorded a real estate wealth system course. You can find this on my website under courses. We'll put a link in the description below so you can find it as well. So you can go ahead and sign up. This is going to be launching on Monday. This is everything I know, everything I've learned about investing in all types of real estate, residential, commercial, multifamily, real estate development. I put it together in a complete real estate wealth system. This is, again, went to a studio, professionally produced. We've got lots of downloads. It's a complete system on how you can get started investing in real estate and grow and scale your business as it goes along. So make sure you go here, sign up to get notified when this new course, Real Estate Wealth System with Verified Investing, is released on Monday. I partnered with Verified Investing to bring you this course. This is with Gareth Soloway. He's also got some courses on technical analysis for stock markets and crypto. Really good courses there for you to become that complete investor. If you're making money in stocks and crypto, you want to get into real estate to take advantage of the tax advantages that you can gain through real estate. You want to grow and sustain your wealth and kind of diversify your investment strategy. So you want to make sure that you take advantage of these opportunities to become that complete investor. So be on the lookout for that. Monday, November the 20th, this new course is going to launch. You can go to my website, click on the link below, and get yourself registered for notification when that course is released. So until then, I'll see you in the next video.